Now, Moneybox with Paul Lewis.
Hello. In today's programme, as repossessions for mortgage debt reach their highest for 5 years, one bank launches a 5-time salary mortgage and another won't comment on reports it's planning to lend 125% of the value of your home. Is mortgage debt getting out of hand? The government tells us its plans to change ISAs. They're making us wait for the new limits on what we can save, but there won't be a big rise in the cash limit. Bob Howard's been topping up this week.
That's right, Paul, looking at the payment card you can get without a bank account.
And we put your ideas on making cash machines safer to the banks. This time next week, interest rates could be 5%. If it doesn't happen then, most economists agree it won't be long before it does. But in the week when house prices continued their upward path and the number of people losing their homes due to debt reached its highest level for 5 years, are there really deals out there which will let people buy the home they want without taking too much risk? Abby chose this week, of all weeks, to say it would lend some individuals and couples up to 5 times their income. Ricky Oakey, Abby's managing director of mortgages, told me why.
Unless you're living in a bubble, you'll have known that property prices are at a point now where levels of affordability for people who are purchasing and remortgaging are concerned about whether they can raise the levels of monies that they require. So what we've done is we've simply said, for a segment of the population with demonstrable earnings at the higher level and lower credit exposure than the typical individual, we'll flexible than we have been in the past.
You say there's an income limit on it. Just tell me what that is.
For somebody to be able to reach the levels of 5 times their current salary, they would need to be earning in excess of £60,000.
Right, so this is a fairly small segment of the population you're talking about.
Yes, it is. And again, I say that this isn't a blanket approach. It's a particular segment of the population who we believe could afford it. And frankly, if somebody could only afford, on our assessment, 3 times income, then we will lend them 3 times income. If we think they can afford to repay 5 times income, then we will lend them 5 times income.
So you're talking about 5 times income. Is that the absolute limit, or are there cases where people might borrow even more than that?
If you take into account the fact that affordability is the key, not the income multiple, then we will assess every single upon its own merit.
Of course, you have the security of the property. If they overborrow or you overlend, you can just sell their house and get your money back, can't you?
Paul, I think it's a dual responsibility, isn't it? When somebody comes to us to talk about a level of borrowing for a mortgage, then it's critically important that they take a view of their current levels of affordability, the level of interest rates today, but also taking a view at the level of interest rates in the future. So between the two of us, we will come up with a position that hopefully satisfies their ambition, but also sits within the responsible lending criteria that we apply.
Yes, and you think this is responsible at a time when interest rates are almost certainly going to rise, possibly as soon as next week. There were record bankruptcies this month and repossessions up 15%. Aren't you running the risk of driving people to borrow more than they can afford?
No, we're definitely not driving people to borrow more than they can afford. We're taking a sensible view to the marketplace, and I think interest rates are still at a point where they are affordable to most people, as long as they take a sensible and pragmatic and responsible view of both the future and their current desires today.
Ricky Oakey, Head of Mortgages at Abbey. Well, with me is Francis Walker of the Consumer Credit Counselling Service. Francis, is Abbey being, as it says, a responsible lender?
Well, I think the problem with these sort of mortgages is that people have to acknowledge that it's taking an awful lot of money out of their take-home pay, and the mortgage payment is only the start. You have all the other essentials of life, you know, your bills, your utilities, your living expenses, and there is no doubt that we see an awful lot of people who take their credit to the limit with the mortgage and all the rest of it, and then the unexpected happens. They've got absolutely no slack, and there's, you know, I sympathise with everybody's desire to get on the housing ladder, but being repossessed is not the right way to go about it.
Yes, I mean, it's easy to blame the banks, though, isn't it? They make the offers, we sign up to them. Are the people you're talking about just really borrowing too much?
I think there's got to be responsible lending as well as responsible borrowing, but the creditors are sitting around all the time thinking of new ways to get people to borrow money, and it's very difficult for people. Sympathetic, getting on the housing ladder, all the rest of it, but they've really got to do their sums well and take expert advice. If you're a very sophisticated borrower and you're pretty confident that you're going to get a pay rise, you might just risk this, but you know, the unexpected always happens in everybody's lives.
Also with us is Ray Bolger, Senior Technical Manager from Charcoal. Ray, ABBY's come out with this statement this week, but I know we've talked on the programme before that lenders have been lending more than 3.5 times. Is it just admitting to what other lenders are doing anyway?
Yeah, essentially what ABBY have done is to put into black and white into a table the amount that an income multiple equates to on the basis of their affordability calculation. But you're absolutely right. A number of other lenders will lend a similar amount and have been doing so for some time, but they just haven't expressed it as an income multiple.
No, because I suppose it's obvious if you're on £20,000 a year, you have less spare cash than if you're on £60,000 a year, and so you can afford a bigger multiple of that because you've got that much more to spare at the end of the month.
Yeah, that's the key. The higher your income, the smaller the proportion of your income needs to go on other essentials apart from your housing, and that's why ABBY and indeed other lenders will lend a higher proportion of your income to people on a higher income.
And when they do that, do people pay more for it? Is there a bigger risk, and so that the percentage, the APR they're paying is higher?
No, the terms that are available in general will be the same whether you're borrowing 5 times income or 3 times income. There is one lender who is an exception to that in the mainstream, and that's Cheltenham and Gloucester, and they actually will lend more than what they consider are their normal multiples at a higher rate. But that is very much the exception.
So you're paying for the risk in that you're paying even more, and you may not be able to afford it.
That's right. In general, the key thing that will indicate the rate a lender charges is the loan to value. If people need to borrow more than 90%, for example, they will often pay a higher rate than if they've got a good deposit.
Well, and of course, in one of the papers today, HBOS is reported to be planning 125% mortgage, so you're borrowing a quarter more than the property actually costs. I mean, that does seem to be putting a bit of a risk on things. HBOS wouldn't confirm or deny it, incidentally.
No, well, essentially, we've already got that sort of deal in the market. Northern Rock have been offering their Together mortgage for 7 years now. Coventry and Mortgage Express offer similar deals. And in actual fact, the way this deal is structured is that it's a 95% mortgage and a 30% unsecured loan.
We've heard from economists on the programme that interest rates are likely to go up next week. Francis, you said the unexpected can throw you out. An interest rate rise shouldn't be unexpected, but often is. If they go up by another 0.5%, could that throw some people into the problems and coming to you?
Yes, it certainly could. And obviously, if interest rates do go up, everybody needs to look at their budgeting again and sort it out. I mean, there's other things that are going up all the time, like utilities and things like that. People are under increasing amounts of pressure, but we still live in a relatively benign economy, of course. And obviously, people, before they're taking out quite complicated mortgages, should probably go to an independent organisation like Charcoal and get the advice they can, because these matters are complicated. And
leave a bit of slack. And Ray, if interest rates do go up next week, as most people seem to expect, by 0.25%, what would that do to a typical mortgage?
Well, typically, if you have a mortgage of £100,000 on a repayment basis, that will push your monthly cost up by about £15. If it's an interest-only mortgage, about £21.
So you have to take that into account. And briefly, is it a good time to fix? So at least you know what your mortgage is going to be, even if rates do rise.
Well, fixed rates have been edging up, but there are still some good deals on the market. I particularly highlight a 2-year fix from Nationwide, which is very good value for anybody borrowing more than £200,000. It has a rate of 4.47%, quite a high fee of £1,500, but good value for large mortgages.
Yes, huge fees, aren't they? Anyway, no time to go into that, sadly. Ray Bolger of Charcoal, thanks, and Francis Walker of Consumer Credit Counselling Service. And if you want to share your thoughts on mortgages and affordability and lending, you can have your say on our website, bbc.co.uk/